Hello, good afternoon, and welcome to the live trading hour, which is brought to you by the Live Trade Room, where we will be looking across these financial markets, some of the largest, most liquid markets in the world, from your foreign exchange markets, your major markets like your euro dollar, through to your commodity markets like gold and oil, and also the global indices markets as well. So what's very important for us when we trade is that we understand market correlation, that we understand where the flow of capital is actually moving to. Is it moving towards riskier assets, or is it moving towards your safe haven? So we want to track the flow of capital and the commitment of others. And the best way to do that is having a multi-asset class view. If you've got just a very focused view on one particular asset class, then you can miss out a little bit in terms of what's going on in the overall general market. So that's what we'll be doing, and we'll be taking any trades. If we get these opportunities during this broadcast, we'll take those trades live. So you'll get to, I suppose, we'll get an opportunity to talk you through the entry process and how we generally position ourselves in these markets. We've been talking a lot over the last couple of weeks about the lack of correlation in these markets. So we're seeing some strange market conditions. What we were talking about was equity markets pushing higher, Treasury, US Treasury yields continuing to make new lows, low after low over the last few months. And the dynamic between the dollar and the indices markets has been a little bit counterintuitive. Now that is beginning to subside over the course of last week. It's beginning to fall away a little bit. We're actually seeing the correlation as we would expect it now, with the indices markets being put under a little bit of pressure, and we're seeing the US dollar perform, I suppose, a little bit more in line with expectations. So let's get into this trading session. We'll talk you through a little bit about the context of these markets, and we'll touch upon this very kind of baffling sort of lower yield treasury bond market, which is it's definitely putting a bit of a spanner in the spokes a little bit. So we'll talk you through that in just a moment. So just before we begin, if we can start, as we always do, with a risk warning, please, of course, just take a brief moment to familiarize yourself with our risk warning currently up on screen, and hope you're surviving the heat at the moment. It's beautiful weather right now, so long may it last, I guess. Okay, so the first thing we do when we get to our trading desk, we've got US capital coming in about 8 minutes when the US cash open begins. So we'll have an influx of capital. So we'll prepare ourselves in advance of that, but we need to make sure that we understand some of the major data points that are likely to be of concern to us as traders. What we want to avoid doing is obviously jumping into any particular trade when there's a major news announcement that's due out that's likely to get in our way a little bit. So I just got a question here. Mash Haroon, apologies if I've mispronounced your name. Are indices going to bounce back today? I would doubt it. And I'll explain why in just a second. We've been looking for these indices markets to roll over now for a few weeks, and they've failed to do so. So we'll discuss exactly this question in a little bit more detail in just a couple of minutes, if that's okay. So do bear with us. So today, Monday the 19th of July. As you can see, we don't really have a huge amount of data points to consider. I suppose if we take a little step back, we've got an agreement now with OPEC Plus. That's your OPEC being a cartel. We've got OPEC oil producing countries. We've also got JMMC countries. They've all got together to make decisions in terms of supply cuts over the last few years. And now they're looking to taper those cuts, i.e. bring on some more supply into this market. So if you remember, over probably 2 weeks ago now, OPEC failed to make a firm decision in terms of supply cuts. UAE took a position where they weren't happy with the amount that they were allowed to supply into the market. So now a deal has been cut between between Saudi Arabia and UAE for them to marginally increase their supply. But what we're seeing now is an increase of 400 barrels per day, that increase in supply into the market. So the instant reaction really is at putting the price of oil, is putting it under a little bit of pressure. So again, we look at the oil market in a little bit more detail. But just as far as today's sort of news events are concerned, we don't have any individual sort of data points that we need to consider. It's really more about the sort of the macro sort of high inflation, increasing interest rate, tapering bond yield type environment, which at least it's coherent, and at least we can make better trading decisions with a little bit more confidence in those decisions than what we've been able to do over the last couple of weeks, which has been a little bit sort of counterintuitive. So that's the good news. We have these market conditions which are now sort of stacking up for us a little bit more than what they have been. Just to comment on the treasury market, so we've got a 10-year, so we're looking at sort of longer term treasury yields, and as we know, they've went on a massive decline now since probably May time. We were up at the 160, 170 level, and as you can see, we're right down at 1.229. So they've taken a huge hit to the downside. Now, what's confusing is we're seeing this rollover in longer term bond yields during a period where we're experiencing kind of higher inflation. The stats that we've seen from CPI, US CPI and PPI data over the last week or two have significantly outstripped the expectations, even as far as the Fed are concerned. So they've been talking an awful long time about it's transitory, nothing really to see here, move along, we're just going to carry on as we are. And now we're seeing the impact of that begin to creep into the market. But like I said, the slightly confusing aspect of this whole market condition right now is with these treasury yields, which are continuing to completely reverse the fortunes at the beginning of the year, where we were expecting this high inflation environment. We're still expecting this high inflation environment, although the yields are moving in the opposite direction. So what does that mean in very, very simple terms? We have capital coming out of your riskier asset classes right now, like your global stock markets, and this goes back to your point as well, Masharoon, which is the flow of capital. So we're seeing some bit of profit taking in these global indice markets, but we're seeing sort of increased demand in these very, very low bond yields. So if you can imagine tying your capital up for a 10-year period where you're actually seeing negative real yields on that capital, so you're getting back less than what you're investing. It seems like a counterintuitive approach, and it just probably goes to show the concern, the difficulties that traders are investing with these market conditions. Okay, so without further ado, let's have a look at these markets, and those are all important indice markets as well. So from last week, we were looking at the euro dollar further to the downside when I left you towards the end of last week, and we're seeing further continuation to the downside now. So below the 1796 or below the 1800, and we're nicely below that level. The CAD has been a fantastic trade above 125.55. We're now up at 127.75. The Aussie dollar's rolling over nicely to the downside below that 74.10 level. So we got that break earlier this morning. And this is the important one. So this is what we'll kind of revert to. Are the indices going to bounce back today? This price action indicates the answer to that question firmly right now is no. We've got 3 days. It was a bit stop and start really initially, and we flushed lower and then we kind of reversed, and then on Friday we started to squeeze up very close to these all-time highs again. And then if you're watching the price action towards the latter part of Friday night, we started to see the rollover kick in, and we started to see it continue when the markets opened last night. So we have 3 days now of convincing price action. Now we can firmly say, at this moment in time, the sellers are firmly in control of these markets, and that's what a market is. It's nothing other than a battleground between buyers and sellers. So when we can identify who's in control, it makes our decision making slightly easier. We don't want to, well, we never really want to make decisions in terms of what we think, if that makes sense. We want to make decisions based on what we see. So if you're asking me, do I think these stock markets will be at all-time highs? My answer would probably, and perhaps my colleagues as well, we'd probably all say, yeah, we're probably likely to be at all-time highs again in the not too distant future. The problem is we can't make that assertion right now because this market is really rolling over to the downside. The other observation we can make is we have a double top in here, and this is purely just a pullback. It's an excessive pullback, but it's just a pullback. So if we look at these pullbacks...
A spokesman for UK Prime Minister Boris Johnson says they'll be setting out their plans on the Northern Ireland Protocol in due course.
So if we look at these other pullbacks, when we get these little flushes to the downside, we normally get some buying, which is probably what I'm alluding to.
The Prime Minister will be holding a press conference on the pandemic at 5 p.m. today.
Okay, that'll be interesting for those of you in the UK. We'll have Boris Johnson due to speak to the nation regarding Freedom Day, so it'd be interesting to see how that plays out.
On the vaccines, the UK Prime Minister's spokesman says the AstraZeneca vaccine is less effective against the beta variant.
Actually, on our analysis, you can see this little 3-day little move in here. You could also, that's another pullback section. You get the same in there, and you get the same in here. And just look what happens each time we get these little flushes to the downside. We get it gets followed up pretty quickly by a significant amount of buying coming in. So our analysis would be eventually, and it's probably alluding to your question actually, is are we expecting a bounce back? And the answer is yes. We just have to be quite careful about the timing. We'll be looking at these levels in here to see if we get some buying pressure. For now, we'd expect further downside, at least to the 42.38. So we've got about another sort of 40-50 points to the downside before this market really technically needs to make a decision. And this market hasn't really performed from a technical perspective. You can see what happened in here around the 50. You can see the false breakout in at that level. You can see the pretty urgent reversal when prices get down to this 50 period moving average. So it is an important level to monitor, but we will certainly short term we'd expect further downside. Would we expect it to bounce back? Certainly not today. Certainly if we look at this price action, but maybe in a not too distant future, Masharoon, we would probably expect a pullback. So we can also apply that analysis across many of these indice markets. So this is the S&P. Just looking at the Nasdaq, who's in control of this market? Right now, we are seeing the sellers in control, but we must qualify that with expressing the fact that it's just a pullback. We will at some point see that bounce back, but we've had a long, real consistent drive to the upside, which often has you do have issues and concerns buying these all-time highs, even though that's the price action that we're actually seeing. So what price would we expect the Nasdaq to drop back to? And I know a few of you we were discussing the potential for a decent rollover to the downside last week. We're now finally getting that level. So there's an argument to suggest that this level in here is the 14,220, somewhere in the region of this zone in here. We would probably expect that little bounce back to kick in. So we are support and resistance traders, so we want to identify where the support and the resistance is, and then we can make decisions off the back of it. If the market performs as per our expectation, not the other way around, we're not chasing markets, we're allowing markets to play themselves out, to do whatever it is they need to do. If price interacts with levels that we can predetermine, pre-identify, then that gives us a little bit more confidence in our decision making. So I hope that makes sense. We will get a bounce back, or at least an attempt to make a new high, but certainly for now. And if it does reverse, let's say if we see a level such as going back to this candlestick here, which is on the 8th of July. So we could easily get a similar reverse bit of candlestick. But us as traders, like, it's very difficult for us to work with that information and to actually start buying at this price. It's what we would regard as pure sort of guesswork at that level. But if it bounces back to really strong levels of support, i.e. monthly highs, momentum swing highs, 50 period moving averages, and if you include any other indicators that you like to use, if it stacks up, if it's an oversold market condition, all of that stacks up to create in a picture for a buying opportunity, and that's when you're likely to see some more enthusiastic buyers creeping in. The problem with these indice markets is they're artificially driven to the upside. So some of the normal market expectations don't need necessarily apply on occasion, and we're seeing some kind of strange market reactions as a result. 2-day rollover to the downside for the Dow Jones. We're actually currently below that 50 period moving average. What I'm going to do, because we're below that 50 period, I'm just going to put in a 100 period just to see where that. So we'll put in it's a trend indicator, it's a moving average, 100 period. Yeah, so that would be roughly the next level of potential support. And why not do the hat trick, and we'll stick the 200 period in there as well. And we'll turn this into a strong black line. So that's way down here. So that's the US indice markets. Look what's happening in the FTSE. Also, there's concerns obviously in the UK just regarding this new variant, Independence Day, or Freedom Day, I think it's called, isn't it? So this market has really been grinding, and just in this long-term sideways price action now, we can probably extend this a little bit further from this little breakout just in here. We've just been literally moving sideways, and now that sideways move is unraveling just a little bit. We're coming back to previous lows, just sitting in at this level. So this is a strong level of support down at these lows. So we're a little bit off the low. Let's see if the price can get to that level first, and then we want to see some indecision at these levels to perhaps take a buy trade. But for now, our attention needs to be firmly on further selling in these markets, and some of the price action over the last few months has not been nice with these markets. So, and some of the fundamentals have not been that easy to work with. And that's what traders need to navigate. They need to navigate through these periods of uncertainty. There is market conditions which are much easier to trade, and then there's these market conditions which are a little bit more challenging. And what happens with a lot of, especially new and inexperienced traders, is they'll often switch their approach. They'll throw out perhaps a winning strategy, and they'll change it for perhaps a scalpers type strategy, and then the market conditions change again, and then they'll have to change their trading strategy multiple occasions. Where in actual fact it's about being consistent, and it's about being patient with your time. There's some conditions which are really great for traders, like breakout traders like us, and there's other conditions which are not so great for traders like us. So, you know, what we've experienced over the last 2 or 3 months has not been fantastic. If we're looking to trade the DAX, for example, you know, it's a lot of false breakouts, it's a lot of sideways moving action. So our strategy doesn't perform brilliantly well during conditions like this, but it does during you know, potentially breakout trades that are, you know, well supported. So often it's more of a case of being patient for us. So we did finally get this little rollover to the downside. We have this kind of upper trend line in here, and this market is taking that little rollover to the downside. So this is the important level, the 27,127 to the downside. Anyone trading the Nikkei, we can probably take this level out and just monitor this low in here. Prices are at that price as things stand, and look what this looks like on a monthly time frame. With 4 months of pure indecision and a lack of kind of clarity, you could even extend it to 6 months, where prices made a high, they kind of pulled back, indecision, you know, slightly bearish engulfing, more indecision, and now we're getting that flush trade. So actually a break below that monthly low, the 27, you'd expect actually a nice flush to the downside. And then Bitcoin, just to finish off, further downside pressure on Bitcoin. No major surprise. We've got some interesting news headlines from regarding Ethereum. So we've got the, where are we? Yeah, Ethereum co-founder says safety concerns has him quitting crypto. All sorts of headlines like this. Crypto traders loved big leveraged bets until inexplicable crash. There's still a lot of mentors online that are just advocates of continuing to get into Bitcoin. You know, keep buying it. They don't seem to be referencing at all how people should get into it, but constant sort of buying opportunities, and they're just getting smashed time after time after time. So all good when prices are very bullish and continuing to make new highs. Now this is the pain time. This is when most traders are, you know, really sweating. If they're certainly trading with you know, derivative markets and trading with leverage, that's something we've never advocated traders to do. In fact, trading this market is really unadvisable. You might as well go to the casino and put your money on black, or red for that matter. So trading cryptocurrencies with leverage on an intraday basis is always going to be a very, very challenging and difficult thing to do, even for experienced traders. Although the vast majority of those trading it are very novice and you know, probably getting into this little move at the latter stages. So those who know the least lose the most. That's unfortunately the reality of it. And one of the reasons for that is they'll continue to hold.
Central bank decision on Thursday. Reuters reporting the Eurozone 10-year real yield, that's measured as the gap between the Euro swap rate and the inflation-linked swap rate, now falls to a new record low at -1.54%.
Okay, so we're getting another leg to the downside for the euro dollar. or we're getting close to that leg to the downside. So what we'll do is one thing we were discussing today was to just sort of share the bigger time frame with you guys so that you can prepare yourself. We can certainly remove quite a few of these little levels in here. So this is the monthly time frame. We have these lows just sitting in these lower levels, but last month there was some significant rollover price action to the downside on the bigger time frames. This is a monthly time frame, and what it creates is a double top. So now this market is getting very, very close to a very, very significant level, because if prices break through the 1700, then we're probably likely to get a whole range of new sellers entering this environment. Certainly those that trade the bigger time frames, because they'll be looking to trade momentum, and this will be a momentum swing trade to the downside. So that's the euro dollar, and we can apply the same logic to most of these dollar pairs. We're looking for dollar strength at a time where we've never seen so much dollar being printed, and normally that has an impact of devaluing a particular currency. But in this case, on the strength of the US economy as they reopen, we're seeing that little flush trade to the downside now. Just looking at a few of these trades off screen, so I'll let you know when that decision arrives. So we're down at these lows. I would expect further downside, and there's no reason why not, down to the 117, potentially below it. And you could do this analysis. You see, there's your monthly low, so we know now we're below that monthly low to the downside. Is there more downside? Absolutely. So this is a kind of a double top. Perhaps not all the way down to these levels, but we'd certainly find a corrective move back down to these levels as a first port of call. So we're quite close to just breaking this 5-month low and seeing this market really extend further to the downside. So as traders, we've got decisions regarding, which markets should we be focusing on. The euro dollar to the downside, the pound dollar to the downside. And then we've just got to sort of cherry pick our opportunities, because we're seeing the dollar significantly outstrip the performance, the Japanese yen to outstrip the performance of the dollar. So actually the yen is much stronger than the dollar right now. And you're seeing that in markets like the pound yen and the euro yen. So we're seeing really strong moves in those. And again, we can add those to our the euro yen, the pound yen, to our analysis for that reason. So this is a market which is about a flight to safety. So we're seeing capital move very, very clearly towards safer market conditions and safer places to store their money. And that's generally the dollar, the Japanese yen. You can often see some capital coming into the Swiss franc. And because of the dollar strength, we're actually seeing the gold market, which could actually be a beneficiary of flight to safety capital. We're just not seeing it in this case. So really the focus is on the yen and the dollar, just to clarify. Is there any other dollar pairs that we can sort of focus our attentions on? If we look at the dollar CAD, this has had a really strong explosive move to the upside. The problem is now we're up at these extended levels. You kind of want to wait for a coherent pullback, ideally to the 200 period moving average, if we can get that opportunity. So that's pretty much gone now. The Aussie dollar to the downside. We're seeing actually an unraveling of the last 5-6 months, where we're seeing this market be under pressure once more. The overall trend, if we go back 10 years, is very much to the downside, and now we're looking like we're going to see another leg lower. and these are all on the monthly time frames, so it's worth keeping an eye out for that. New Zealand, not quite in the same boat just yet as the Aussie dollar, but this would be a very significant flush trade to the downside. And we've got these levels just sitting in at these lows. And these are central banks which are anticipating increasing rates sooner rather than later. So you've got this again, this kind of counterintuitive market condition really, but we've got such a strong level of consolidation in these markets that a break below these lows, the 69.14, we'd expect further downside. So maybe that's one of the next markets to move. So we can probably add the New Zealand dollar to the downside. And just very quickly, if you have a look at what's happening with the euro pound, so prioritizing the pound right now is probably a better trading decision. So we look for further downside in the pound yen, the euro yen. Gold will just back off just a little bit because it's reacting to that dollar strength. The oil market is an interesting market. So we're seeing a really strong flush below the 50 period moving average. What I'd like to add, if you don't mind, is that we'll add the 200 period, which is way down at these lows, but I also want to put in the 100 period. So so this is once you break through the 50, if we reverse, we're currently just above the monthly low, sorry, the previous monthly high, should I say. So we're bouncing back to that level, and that's around the $68 level. And with the supply cut, we'd expect further downside. So maybe tomorrow might be actually a better opportunity if we can get a close, and then we get some continuation, and maybe if that breaks through the 6,800, we'd be pushing back down to the 66.20, something like that. So yeah, further downside perhaps for now. We'll look at the S&P. So we've got the euro pairs, the yen pairs, the New Zealand dollar, and the S&P. You could probably look for opportunities in most of these markets, to be fair. Let's focus our attention on the S&P. So those are our trading opportunities. So we'll look to see where the opportunities lie now. So 2, 4, 6. So I'll put these 6 trades currently up on screen. We put the pound yen, sorry, the pound dollar, should I say, just in here at these lower levels. The pound yen can just move next to the pound dollar. Let's get the euro yen just pushed up next to the euro dollar. Sorry, let me convert this to. Okay, the New Zealand dollar, just to see if we get a little bit of a break below this low, just sitting in here, just that little low, the 69.14. We're just a little bit above it as we wait. And then the S&P. So I suppose the good news about these markets is, at least now, they on Friday and today now, they're beginning to stack up for us. They're beginning to make a little bit more sense, i.e. that the correlation is relevant. We're still in the euro dollar to the downside, so that's exactly what we want to see, further downside moves in the euro dollar. So we want to stay below that 1770, and we've easily got a move down to the 1700. So let's see if we get that follow through. And really, we want to see what's happening in this US trading session. Will we start getting turnaround signals, or will we? And how will we be able to see those? That's a very good question. So what we can do is we can take these lows, just the most recent low that's just been printed, and we can also take a swing high. And if we do our analysis correctly, we can identify this as a double bottom. So at what point would our bias start to shift back to the upside? Well, it's relatively straightforward to identify. Above 117.82 would be the price at which we would then completely change our analysis on the trade. As you can see, prices are decent. Well, we're probably 15-16 pips away from that becoming the case. So this is what we like to see with the US dollar, with some capital coming in from the US. Do we see these levels of support be defended with the US capital, or will we see the actual confirmation that, yeah, we're happy for this market to continue lower? So we'll have to keep both options open, because that's what we do as traders. We want to commit to a trade once we get the confirmation we look for, and that's below the 1765. If prices are above that level, we've got to be open to a reversal trade above 1782. So, we're in this little sideways zone. That's how we look at it right now. That's what we look for. We look for consolidation so we can make decisions off the back of it. So we don't have any data points to consider, really. So what we will do is we'll just identify the prices at which these trades. So we're well below the 1796. So let's amend this one to below the 1763 level. So if prices roll back lower to the downside, we'd be looking to get in again at the 1763. Let's go into the pound dollar. And you can see that this is a flush trade. We're below the monthly low. We're below the low of the 2nd of July. So our bias is very much to the downside. We go into the smaller time frames, and we'll see how this market reacts. Okay, so it's the 37.30 level. 37.30 is here. We've had a flush down. We've had a bit of a pullback. So we've got a bit of kind of up and down price action right now. So we want to be sellers of this opportunity. So we've had the pullback trade already just pulling back to this level before we got the flush trade to the downside. So there is the 3700. Okay, so if this market breaks below the 3687, then we'll be looking for a selling opportunity. So this is a breakout trade. So we like to identify the type of trades we're looking for. This is a high probability breakout sell trade. Below the 136.87, 136.87. So we don't want to sort of double guess ourselves too much. If prices break lower, then we'll look to pull the trigger. Look, the big moves are really in the euro yen and the pound yen. So I'll just change the size so you can see it probably a little bit clearer. Okay, so let's get into the yen pairs, and again look at it on the monthly. Plenty more downside. You know, we'd be looking at these prices.
The chairman of the European Banking Authority, the EBA, says bankruptcies and non-performing loans are to rise less than expected, cites progress in vaccinations across Europe.
Okay, that's obviously a good news story. It was one of the concerns, of course. This is a double top here in a monthly time frame, and a break below the 129.92 is further downside, and we'd expect that really from these lows, so we can get into that on a much lower time frame. Let's have a look at it on the hourly. So really you want to pull back to the 129.57. This is extending lower at this stage. So when you get this, like half an hour ago, there was an opportunity, hopefully, that we'll get a coherent pullback. This is your strong level of support and resistance. So we want prices to obviously break through to the downside, which we missed that sell trade. And now we want to pull back to that same level. And if we get that, then there'll be a no-brainer sell trade. And this is what we mean by we don't go chasing trades. So we're not interested in getting in at the 128.90. We're only interested in getting in on a strong pullback. And then that helps with stop loss placement. It helps with profitable risk reward on a trade. All of these things start to fall in nicely if prices pull back to 129.57. You've got significant problems if you're selling. It's like catching a falling knife. So don't be surprised if you get a few cuts if that's your strategy. We want the markets to perform as per our expectation, which is to get in closer to 129.50. Then we'd have a stop loss at around 130.26, probably a little bit more than we would like, but this is the euro yen. Euro yen and pound yen are quite excitable markets, so you can get really big moves pretty quickly. As opposed to getting in at 128.80 and having a stop loss, 140 pips away. So, or perhaps you could go even closer, but then you will experience probably a pullback which could get close to stopping you out. So it's just about putting all these things into action. So so we're looking for that. So we're looking for a pullback sell trade around 129.50 level. So that level in here, 129.50, would be a high probability sell trade if we get that opportunity. So we could probably put this level up here, high probability sell trade, pullback sell trade around the 129.50. The pound yen, we flushed further to the downside, so let's give you a price for that. I mean, straight away, the natural sort of pullback level would be the 150.63 level. That's on the daily time frame below the monthly low, so it all stacks up. Let's see how coherent that trading view is. Yeah, 150.60. So there's a bit of indecision around that particular price. So not as clear cut really as the euro yen. You would still be looking at getting in on a pullback now. We're flushing lower, so the 150.63. $150.63. So let's put that level in. So your high probability pullback sell trade around the 150.60 level, 150.60. So that's the pound yen. So a little bit of patience now, perhaps with the euro yen and the pound yen. The New Zealand dollar. This one's quite straightforward, below the 69.14. Except it would be a breakout sell trade. Breakout sell trade. This time below the 69.14. Okay, and the S&P, like the 42.87. So it's really a pullback to the 42.87. It might flush lower before it gets to that level, but a pullback to 42.87. So this is a high probability pullback trade to the downside. Sell trade around the 42.87. So so these are the opportunities we're going to sort of focus our attentions upon and make sure that we've done our analysis, we're comfortable with, I suppose, the trading opportunity. So it's really just waiting for this breakout trade. Sorry, let me see where that is. Break. Okay, it's a pullback to 42.87. I don't know why. 42.87. High probability pullback. Sorry, I just done all this, but for some reason pullback. Sell trade around that 42.87 level. Okay, so so that's really the price at which we would want to look to get into this trade. So currently up on screen we have the markets that we're going to focus our attentions on. We do like the euro yen, pound yen to the downside. They're continuing to flush lower, so we want to get in on a pullback of those if we can. And it looks like we're getting some sideways price action in the euro dollar and the pound dollar, so it's a breakout trade for those two. Same situation for the New Zealand dollar, breaking below that sort of multi-day low at 69.14, and we kind of want the S&P to just pull back a little bit to 42.87, and then that can give us a high probability sell trade. So so on that note, guys, we'll let you guys go there. Thank you very much for joining us as always. It's just going to be a case of just trying to get that timing right. We know which markets we need to focus on. We know what direction we're looking to trade those markets, and we also know the price at which we want to engage. And that's really the benefit of having a trading plan. We meet every night at 9 o'clock to go through these in a lot more detail. And then when we get to our trading desk in the morning, we're able to sort of apply what we've discussed and what we're prepared for. So hope you found that useful. Give us a thumbs up, subscribe to our channel if you possibly can. We'll notify you when we go live, of course, completely free access. You'd be more than welcome to join us. Absolutely my pleasure, Masharoon. Delighted to have you with us, and do feel free to join us again. We'll be back again tomorrow at 12:30 and every day this week. So on that note, thanks very much for joining us. Enjoy the rest of your afternoon, of course, and we'll see if we get some decent trades to get into. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.